Hello guys, welcome to a new video. And markets are in deep red, right? And this all happened in last 2 days, and we all, if you are following the news, you all know why it's happening, right? It's all about tariffs. Market has lost almost $6 trillion in just 2 days, right? And this is as bad as pandemic. Actually, it is worst if you look at last history, right? This is kind of worse than the pandemic. It even in March 2020, the market was not this bad and it bounced back quick. But in this case, we don't know what's gonna happen, when it's gonna bounce back, and there is no clarity, right? That's the reason why it is down. And we have to talk about that. It's all happening because of the confusion that's all this tariff is creating, right? Nobody knows how they came up with those numbers or what's gonna happen, what are those tariffs. None of the news channels have clarity. None of them are super clear what's gonna happen. It's all in that one person's mind, right? So it's really a volatile market. But as an options trader, what we can do and what we can do to save our portfolio, and personally I am down quite a bit, but what strategies I am applying in my portfolio to just stay invested, right? And there are some key stocks that I have identified that I'm gonna discuss at the end of the video. You can still use those stocks to make some money in this downturn, right? I used those stocks to make some money even in this last 2 days. So we are gonna discuss all that. If you are interested, guys, stick around, and with that, let's start. Coming to the strategies, right? So I want to discuss 3 points in this, which I'm actually doing in my portfolio as well. The first one is in the money covered calls, right? This works very good in, because we are already, if you look at the charts, right, we are already in the correction, or in case of QQQ, right, we are all in the bearish kind of market. And this in the money covered call is one strategy that actually works okay in a bearish market, right? It's not very good for the bullish market that we had till Feb end, but now we are going into a correction and bearish kind of a market. So in this market, this in the money covered call is one strategy. You can use it. There's some points that I'm going to discuss now which you have to be very careful, otherwise you may lose your stock with a less than average buy, right? So you have to keep those points in mind. So just quickly, what in the money covered call is, let's say you have a stock here, right, which you bought with a average buying price of $100, right? And right now, let's say that stock is at $80. That's what we are seeing, right? Or most of the stocks are down 20-30%, even 40% down, right? So what do? You cannot, if you want to sell covered call at that $100 mark, which is your average price, you're not gonna get any premium at all, right? So for those cases, what you can do is you can sell covered call. In this example, you can sell a covered call at $90, right, which is $10 less than your average buying price. So in that price, you're gonna get some premium. But keep these two things very much in mind when you do that. First thing is at you have to keep the expiration date at least 3 to 4 weeks or a month away, so that you have a time to react, right? So that's first thing. Have a good expiration date. Don't keep it too short, otherwise you will be struggling, because the markets are volatile. We never know what's going to happen tomorrow, right, or day after. It may shoot up like 10% suddenly and then it goes down, right? So keep some time frame with you, so that you have time to adjust your positions, right? That's the number one thing. Number two, and this is very important, right? When I say $90 mark, you have to know that you have that kind of a strong resistance, right? At that mark that you're selling your covered call, you need to have a strong resistance on that line, right? So do a chart. A simple chart is fine, like this one, right? So you just know your support and resistance line, and that should be enough. Your resistance line is very important when you are actually doing the in the money covered call, because you do not want to lose your stock for less than you bought for, right? So that makes it super clear that you need to know your resistance line. Now the second one, right, and this one is kind of applies to any of the option strategies that I have a lot of videos, guys. If you don't know, if you are new to this channel or new to options strategies, then I have a lot of videos in my channel. Do watch them, and that's gonna give you a lot of ideas, right? Now to the second strategy, right, and this one is about the time frame that I discussed, right? So the time frame right now, the market situation, based on this, you need to have time in your hand. You do not do any short term trades, okay? Have a long term horizon. This is a good time in the sense that you are getting some good stocks for cheap value, right? So but you cannot do a short term. We all don't know what's going to happen in short term, so have a long term view. If you are a weekly option trader, like I do mostly weekly, but I'm increasing my time frame, right? I'm going 2 week, 3 week out, a month out, or more than a month out in my options trade. So increase your time horizon so that you have time to react, right? Because there are a lot of options to adjust your option position, right? You can always roll out, roll back in. Let's say you do a 30 days out, right? If you see that it's going in your favor, or pull that in to shorter the expiration, you can always do those things, right? You don't have to stuck to that expiration date, but at least to start with, if you have expiration date which is have some time, you get that room to adjust your position, right? And that is very important. So that's the key point that I wanted to discuss. Have some time in your hand, so you have you can apply strategies like rolling out options, right, on rolling back in. So those kind of strategies you can only apply if you have time in your hand. Now the third one, right, and this is more of a risk that you should not take in this environment. Markets are really volatile, and you should not do any short term buying a call. Do not buy call with a short term view, okay? If you have to buy, you can buy a leap for stocks that you really wanted to own. This may be a good time to own that stock in a leap that will provide you some leverage. Let's say you wanted to own maybe Apple, right? And right now, if you look at it's kind of down a lot, and if you look at the leap option, that will be even cheaper right now, okay? So this could be a good time, but you need to make sure that you want to own that and look at the break even price properly, that in case, just in case, if you have to exercise that option, you still have some room that it will grow in the future, right? But otherwise, the main point that I want to discuss in this one is do not do any short-term trading, especially do not buy calls for short-term view. If you have to buy leaps, but that also with a proper research. But do not do any short-term trading in this environment. It's very volatile. You, especially in buying a call scenario, you might lose a lot of money. The two stocks, right, that I wanted to discuss. So the one stock that I have been doing in this environment is American Airlines, and this stock is gonna give me this. If you look at the chart for the American Airlines, right, that is basically having the most of the time when it is down like below 10. This is a 5 hour 5 this is a 5 year chart, right? Okay, and this chart, if you look at this is the strong like support here, right? So $10 mark is a good support for this stock. Okay, whenever it goes below that, it always comes back here. Okay, so that's kind of a thesis that I'm going with, and they provide a good amount of premium, not a very huge, but good premium in this scenario. Okay, so and right now this was very high back like maybe a couple of months back, but now it has come to a point where you can actually make money on this. If you want to own it for long term or swing trade or option trade, this is a good one. I'm doing a couple of cash secured put on this, and with a $10 strike or 9.5 or 9, right? Those are the three strike prices you can select, but this is a good stock to do. You can do the wheel strategy as well in this, that works very good, and it's a low stake kind of a stock, right? The amount is not very huge. Depending on how much portfolio size you have, you can definitely size it accordingly. You don't have to buy like 10 contracts. You can just do one contract, right, or two contract, depending on how much money you have. You can definitely make some money even in this kind of environments, but stick to the stock stocks, this one, because there are a lot of other volatile stock, but this one I have found that it is kind of in a $10 range, which is anytime it goes below, it always comes back. So use this. Lot of strategies in option that you can do with this stock, but that's what I wanted to discuss, that this is one of the stock that you can definitely use. The second one, right, and second one is HOOD, which is the Robinhood, right? And this one I have been doing actually kind of a long call, which is also called leap, right? And this is stock I have found a good support around that time. So I did a quick, if you look at, right, I did a quick scalp on this on the very down day, which was on Friday, right? Market was really down. So I bought this at the market open for 1400, and I sold it like before the day ended, right? So I made a quick $100 on this. So this is like a good one, even if let's say it that day maybe it was down. So I selected a expiration date which is far out, right? So that gives me time, which ties back to the point that I was discussing earlier, right? You need to have time, right? So even if, because it made me $100 and I was good with that, because you don't know Monday how market's gonna open, so I just wanted to book that profit, right? So this is a stock. Keep this in your watch list, and whenever it goes down, right, you can always buy those $25 call that I have bought here, because even the break even price for this was okay for me. Even if I have to exercise this after like 6 or 8 months, I would be okay. So those kind of stocks that you can use the leap strategy for. So that was it, guys. I just wanted to discuss this quick because markets are really in panic mode. My suggestion is, do not panic, just stay invested, close out any short term trades if you have, and be in for the long term. Okay, close out any short term trades if you have as quickly as possible. Okay, if it's a little loss, you can take that loss and just close it out, because short term market is not gonna behave good. But be in the long term, and the stocks that I told you, find a good amount of support and resistance, and do only stick with those stocks. But in any case, do not panic. This is gonna market is gonna recover. It's just the time frame, we don't know when, and that's where the strategies that I told you, it's gonna come really handy. That was it, guys. Happy investing. I'll talk to you in my next video. Till then, bye bye.